Good afternoon. My name is Marty Straka. I'm a mortgage loan specialist. I've been in the mortgage industry since 1990, a long time. And I'm here to answer several questions that often come up in the process of refinancing or purchasing of a home. So let's get started.
Will my credit history prevent me from getting a mortgage?
Well, your credit history absolutely can prevent you from getting a mortgage if you've proven that you're not very good at handling your financial responsibilities. Lenders look at a thing called a credit score, and there's variations on the credit scores, but every lender has policies as to what's a minimum acceptable credit score. You want to make sure that your credit score obviously meets those minimum standards, or you may not become eligible for buying a home. Not everybody's meant to be a homeowner, but with just a little bit of diligence and proper responsibility, just about everybody can get there.
Well, what can I do to improve my credit score and financial health?
Well, the most important thing, of course, is to pay your bills on time and also make sure you've properly established credit. Actually, a very good resource, if you don't mind doing some reading, is to go to the website by the company that actually creates the credit scores. And it's a company called Fair Isaac, and the Fair Isaac creates a thing called a FICO score. Their website is www.myfico.com, myfico.com. It's an excellent resource for really understanding how credit scores affect your life and things that you can do to improve them. I strongly encourage you to take some time on that website. It's worth the read.
Why isn't my credit score higher?
Well, there's a lot of things that come into what affects your credit score. How many different trade lines or credit references that you have, how much you've used those credit references. Interestingly enough, if you have a store charge from a local store or supermarket and it's only got a $200 line of credit on it and you've used $180, which is not a lot of money, but the impact on your credit score can be far more damaging than if you had a credit account that has a $10,000 line of credit on it and if you owed $5,000 on that credit line. The credit score looks at it by a computer model, which looks at the percentages. How much is the available credit that's available? How much of that available credit you've used? These are all things that can impact your credit score. It's actually a very good model that's been proven over time to be a very good predictor as to what's the likelihood that you're going to be able to continue to make your payments in the future. What else?
Does my income affect my credit score?
Income by itself really has no impact on a credit score. A credit score is based on the information that's reported by people that are willing to lend you money or have lent money to you in the past, or you've had other obligations to. But no, income does not affect a credit score.
Well, I've heard that if too many people are checking on my credit score, that can affect my actual credit score. Will my score drop if I order a credit report?
Well, the answer is yes and no. It's actually one of the most common questions we get asked about credit in our industry. If you were to contact and go onto the myfico.com website and research this, you'll find that what they'll tell you is that they understand that people will be shopping when they're looking at credit, but there's certainly an extreme example. So for instance, if you go to a single mortgage lender to pull a credit inquiry, it really won't have any impact on your credit score, or it might, depending upon what else you've done recently in your credit profile, might drop it by a point or two. If you were to contact 2 lenders or even 3 lenders within a 30-day time frame, that's really not going to have any impact on your credit score, not nearly as much as actually charging an extra $40 on your gas card could. What's important to understand, though, is if you let too many people pull your credit profile, then the computer looks at it as, well, you're no longer just shopping, you're grasping. And so if 15 or 20 different mortgage lenders or car lenders have pulled a credit report inquiry on you recently, that shows that you're not just looking to get the best terms, you're literally trying to find anybody that's willing to lend you money. And so the computer looks at it and says, let's lower the score a little bit because we're missing something here. So shopping a little bit, that's okay. Shopping too much, that can hurt.
Okay. Will a low score haunt me forever?
Well, no. Actually, an analogy that I use, and this is a little graphic, so just bear with me a little bit if you will, but think about it as if you were standing out on the street and somebody walked up to you to greet you, and as they reached out their hand to greet you, their arm was all sliced up and there was all cuts up and down it, blood was gushing out. You'd be standing back going, whoa, I don't think I want to touch your hand. What the heck is going on with you? Well, that's a lot like what happens when your credit score, if your credit score gets too low because you've had different people give you credit and you've abused it and you haven't properly taken care of it, all those cuts and damages to your arm are glaring and they're right there and they're showing, hey, nothing is under control here. And that can give you a low credit score. But you know, if you take the time and that same person walks up to you a week later on the street and their arm is all bandaged up, maybe there's a couple of blood stains here and there, but the bottom line is it's bandaged up, and that same person reaches their hand out to say hello to you, you're going to hesitate for a second, but you're going to ask a little bit more about it. Wow, what happened to you? Are you okay? And that's what happens with your credit report over time. Now the same thing with your credit. If you come back to me in 3 months, now the bandages are gone, there's still some scars. I can see that something happened to you because there might be scabbing or whatever. I don't mean to be gross, but it's a good analogy. And so now you come up to me 3 months from now, I can still see you had a problem recently, but I want to talk to you more about it. I want to find out, wow, okay, you're healing well. Let's see what we can do in the future. And eventually, over time, and it could be as little as 12 months, 24 months down the road, if you've taken the proper time to take care of yourself, you come up, you meet me on the street, you stick your hand out, you say, hi, how are you? I don't even see any signs of these problems in the past. Well, in mortgage lending, we really focus on the last 24 months. That's the most important thing to us. If you had excellent credit in the past, but 8 months ago you had a bunch of problems, we're going to sit back and say, wow, I don't know if you really want to look at lending a mortgage right now. But if you come up to me and you've got excellent credit for the last 2 years, but you had a problem 2 years ago, I'm willing to listen to that, and as long as it wasn't completely irresponsible on your part, in most cases we'll still lend you money, mortgage money at that point. I appreciate you taking that analogy with me. Sorry if it made you a little crazy, but it's the best way I can explain how time heals all wounds.
That's some really good information. If I've got any more questions, what's the best way to reach you?
Well, I always have my cell phone with me, and I take phone calls cheerfully anytime after 7 a.m. and up until 11 o'clock in the evening. Best way to reach me on my cell phone, 973-598-5006. I'm Marty Straka. I'm here to answer your questions, and I'm here to help you with your next mortgage loan.